What is going on, everyone? Welcome back to the channel. As I'm sure you've seen from the title, this is probably my most favorite film ever, and I've probably watched it over 100 times. Mark Baum, my favorite character. The question now is, are we heading into another global recession? You got a war in Ukraine, you got sanctions on Russia putting so much pressure on global energy supply and demand. You got geopolitical tensions between China, Taiwan. You have a global inflation problem that has spiraled out of control purely because of all the stimulus that was done over the pandemic. And that has obviously put a lot of pressure on economies worldwide. We have a possible housing crisis in China. You've got double-digit inflation here in the UK, and you have an inflation problem that's spiraling out of control in the States. Regardless of the Federal Reserve raising interest rates, does this show us that it's peaked or not? No, not yet. The evidence isn't there yet. My only concern is the interest rate differential between the States and a lot of other countries. Every country in the world has to have a store of dollars. This is also known as Euro-dollar futures. It is an actual chart that you can go ahead and Google. I'll put the chart over here. And this obviously represents how many dollars is outside of America. It's got nothing to do with Euro USD, by the way. My only concern for the global economy right now is that governments can't sustain this pressure that they have right now. Central banks won't be able to sustain this pressure. Is this the time where there can be a reset for central bank digital currencies, CBDCs, to come into place and replace the current financial system that we have in front of us right now? The United States is already over $30 trillion in debt. How much more can they keep printing before everything goes bust? Now's the time where you either need to make enough money right now to buy the dips in certain risk asset classes, or be brave enough and short everything. The question is, are we too late? The question is, have things already moved, or have we come out of this? Has it been a V-shaped recovery and we're in the clear? Things are going to get better. Only time will tell. Let's jump straight into the charts. I'm going to cover what I'm looking out for, what happened in 2008, mirror it to what's happening right now, and if it's time to fucking short everything. So let's go. Right, the Dow Jones right now is the US 30. This is an index that's made up of the top 30 companies in America, all put into one index, basically all put into one pot, and giving us a value and an index to trade from. Now, looking at the Dow, I do like where it is on the weekly. I like the fact that we've come back into 34,000, which is an area of value of mine. I've been short in the S&P and the Dow since March, since the invasion, since the central bank in America, the Federal Reserve, have been tightening their policy. Now, what does tightening their policy mean? They started by switching off the taps. Over the pandemic, they were printing around $120 billion per month, and that was through bond purchases. $80 billion through treasuries, $40 billion through MBS, mortgage-backed securities. After the pandemic, as inflation started to rise, they now realized that they had to stop printing. Once they stopped printing, that obviously already sent dollar through the roof, and equities possibly forming that high that we've actually seen around the 3,700 mark on the Dow, and the S&P equally so at around 4,800. Now, my concern with this all is they've done that too quick. They've raised interest rates too quick. Is there going to be what is known as a soft landing? I don't think so. So looking at the Dow right now, we'll scroll all the way back to 2008. I want you to just look at the price action. If you are a trader, you know what a beautiful head and shoulders looks like. And I'm going to show you one right now. So back in 2008, when we obviously had the financial meltdown, we had a beautiful technical pattern, left head, right shoulder, with a nice little neckline over there. Right, if you know what a head and shoulders is, that is a bearish reversal pattern where the market obviously presents the reversal to you, gives you an opportunity to get in on two occasions. Two occasions would be scenario number one would be shorting on that right shoulder because you understand the current macro environment. Second scenario would be to allow the market to melt down, right? We already know whenever you have an impulsive move in the markets, you get a correction before the continuation in that direction. Market dynamics, it always happens. Now, looking at this impulsive move that we've had, there again, Fibonacci, my good old friend, always gives us the probability and the opportunity to enter. Now, we obviously had that crash. You're looking at about, let's measure it from high to low. Even if we have to measure from that lower high after we broke the neckline on this head and shoulders, you're looking at a 48% drop in the Dow. I do understand things have changed. I do understand we did have that V-shaped recovery during the pandemic, which was roughly around 30%. I do understand we have briefly corrected out of the highs. However, everything is lagging, in my personal opinion. I do feel that although the Federal Reserve have aggressively hiked right now, I don't see the equity market pricing that in. The Federal Reserve right now, just for anyone watching this that didn't know, have had their most aggressive rate hike path in history. They've never raised interest rates as aggressive as they've raised it now. But the stock market's higher. Equities are higher. Why? Is it the energy sector that's keeping them up? Can't just be that. It's not enough, right? You've got natural gas rallying. Obviously, you've got your natural gas companies rallying with it too, your energy companies. However, it's not enough, in my personal opinion, to sustain the whole market. So looking at where we are right now, I personally, bear with me, right? I personally feel we have had a very similar picture to what happened in 2008, and the market is presenting ourselves right now with an opportunity that only comes around every so often. Every 10 to 12 years, you have that cycle. Why? People get greedy. People over leverage. Whether you're a small trader, whether you're an institution, everyone over leverages. I know Charlie Munger so famously said there's 3 ways that a man can go broke: liquor, leverage, and ladies, right? Those 3 things, quite dangerous. The whole system, in my personal opinion, is over leverage. That has to correct, and it will correct. You can only boil things so much before they break, right? So, looking at this right now, we had, in my personal opinion, we had the left head. We had the break of structure, which is perfect. We had that right shoulder over there. This is a head and shoulders pattern, ladies and gentlemen, where that Fibonacci from the high, let's put that to the proper high. I'm quite OCD when it comes to this, by the way. And yeah, if you know the rules and the methodology, oh, what did I do there? We know the rules and the methodology around Fibonacci, you can use this to your advantage. A, B, C, D. We've hit our target. What do? C becomes A, D becomes B. Just carry on. So it is a trending market, so we are officially in a bear market. Guess what? The market is presenting itself with a lower swing high, possibly. And we are looking at possibly heading lower. But I want to go back to 2008 again. Look at this price action. Look at that price action and tell me it doesn't look the same, because I don't think we're looking at the same thing, if I'm honest. Look at that. Beautiful right shoulder into this 34,000 region, right? Presenting great downside opportunities should you want to short this. S&P, the exact same thing. You go back to 2008. What did the market do? It had a beautiful head and shoulders pattern with a beautiful neckline. We had that breakout. We had that retest. You get it, right? You get what I'm trying to say here. It is so easy that people overcomplicate it. People overcomplicate it all the time. That's why they lose. And it's leverage. The whole market was over leveraged in 2008. Everyone's over leveraged right now. And I personally think the PPT, if you don't know what they are, Google it. I'll put it here. The Plunge Protection Team are an institution that step in to assist financial meltdowns. I personally think they're behind this, because there is no reason for equities to be higher, in my opinion. Just because inflation's dropped slightly doesn't warrant a massive rally that's putting the market back in possible bull territory. Like, come on, it hasn't even broken the highs. However, there are obviously people screaming to go long. What do? We do the fucking opposite. Now, looking at the Dow, right? I'm personally going to be looking at some shorting opportunities. I have been involved in some shorts already. I had several at the start of the year, and I actually recently entered again around the 32,750, which there again stopped me out. I was a bit too early, but we'll take that on the chin and we'll review the market once again. Now, what am I doing? I know we have the FOMC meeting this evening, right? I'm not sure when you're going to be watching this video, probably in like 2 days time. But today is Wednesday, the 17th of August. Yeah, August, had to double check. 17th of August, FOMC meeting. They are more than likely going to outline what the fuck's going on. Is one inflation print enough for them to pivot? No. Is it enough for them to possibly slow down? Yes. That is why the market is where it is. Now, for myself, what am I going to be doing? I'm going to be setting alerts, and I'll actually do it with everyone right now. My first alert is 33,500. We'll do that together. Right, alert set. My second alert is 32,750. That on a 4-hour time frame will notify me on my phone and via email, it's quite cool, that the market has shifted. Then I'm like, right guys, it's time to make some fucking money. So that's the Dow. And the S&P, the same thing. My first alert will be 4,200, right? My second alert will at least be, let's take an average on this. Let's say 4,100. We'll take the average of these three lows. We've got 1, 2, 3. We'll take the average, 4,100. I'll take that. That will notify me, right? There is no point. Traders, I get this all the time from people trying to catch the top, catch the bottom. Trying to catch a falling knife, you're gonna get cut, right? You're gonna bleed. There is no point. We understand the narrative. We understand what's going on. Now it's just our call on when to enter, when to short this market. Please note, in the big short, please go watch it. Michael Burry was in drawdown for over a year. When the market believes what we're seeing, once institutions start to liquidate their positions, we are going to see the crash. And guys and girls, I hate to say it, it's going to happen. A lot of people are going to lose their jobs. It's not looking pretty, right? It's not looking pretty. So make sure you have a recession hedge. If you're struggling with your trading, figure that out now. Not in the recession and you're trying to panic. Sort your things out now. You still have 6 months, right? It's not going to happen overnight. You still have 6 months. I feel we're at the start right now. Sort your shit out. Figure out a new skill. Start a business. Do whatever you have to do to be prepared, right? So I'm going to be showing both the Dow and the S&P, and I'll more than likely do another video as and when that happens. And cryptos as well. I do feel cryptos have another leg lower. If you've lived through a bear market, you'll know there are those capitulation days of 50, 60%. We haven't had that yet. We've had a bear market, right? You've had Luna causing massive ruckus in the markets. But we haven't had that capitulation. Cryptos, unfortunately, haven't seen a recession. They are now deemed as risk assets as they've been trading in tandem with US equities in general. The question then remains, are cryptos going to survive this recession? I personally think only a handful of projects. Stay tuned on the channel. I'm going to be bringing much more. Do follow my Instagram, my Twitter. Feel free to follow and subscribe to my newsletter. It's a free newsletter down below, as I am going to be publishing a lot more content going forward. I look forward to seeing you guys in the next video. Take care. Bye.